Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Hi guys, good morning. It's a Tuesday morning. You're watching Bazaar Morning Call. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Rima. With me are Nigel and Ekta in the house. Hi guys.
Hi.
Morning.
Ekta, you're looking Christmassy already.
Yes, I hope it's not the color of the markets, though it hasn't been. But overall, the texture is looking good, but the volumes could be picking up.
Well, that's right, and rightly so, right? Getting into the, Christmas day, so...
Nigel, what's the countdown?
Where are you going?
Today's my last day for this year. And then, I'm going to Coorg, taking the kids and going to Coorg. So get through today, relax tomorrow, and Christmas Day, I move out. So hold up the markets for me.
All right, but markets are actually looking pretty good. I think the key headline is that the Santa rally continues to roll on. U.S. indices extended their gains for the third straight day. Yes, it was holiday-thin trading, but the tech rebound was very much alive. So here's how the picture looked for Wall Street overnight. Key indices closed up with a gain of about 0.5%. The Dow, the S&P 500 and the Nasdaq all rallying close to about 0.5%. The S&P 500 is now at the brink of its record high level, just about 0.3%. So the momentum clearly remains in favor of the bulls. In fact, 400 stocks out of the S&P 500 ended with gains yesterday. And that AI trade, for all the naysayers, there are that many bulls. The AI trade is back in the lead. So yesterday, Micron ended up 4%. NVIDIA added 1.5%. There were reports that NVIDIA plans to ship H200 chips to China by February. So that fueled the momentum there. So that's the first headline. Wall Street ended up with gains of about 0.5%. The AI trade momentum intact, and Wall Street higher for the third consecutive session. The second big one is gold continues to shine. And now I believe it's the 50th record high for the year for gold. And futures are now rapidly approaching that $4,500 an ounce. And look at silver. Silver is almost at $70 an ounce. One driver, of course, and we've been talking about, is Fed rate cut expectations going into next year. But geopolitical tensions are also rising gold prices up, and they've also driven up crude prices. So look at the crude performance overnight. WTI crude gained about 2.5%, and I think it's closer to about back above the $58 per barrel mark. On one hand, you've got the US-Venezuela tensions, and secondly, even Russia-Ukraine, no breakthrough yet. So Ukraine hit a Russian oil tanker in the Mediterranean Sea. So this geopolitical tension has pushed up crude and even gold prices, and gold continues with its astounding run for the year. Dollar index, just an update, about 98 on that, and rupee closed with strength, on Friday. In fact, Friday was the day where we got that big appreciation. But yesterday, rupee depreciated a tad bit and finally closed at 89.65 against the dollar. Now bringing the attention back home on the Lal Street, I think the big question is, will bulls make a run for all-time high levels, at least before the year closes? The momentum has shifted in favor of the bulls. The Nifty's gained about 350 points just in the last two trading sessions. Yesterday, we closed at the 26,172 mark, so not very far away from our record high level of 26,325, which we just touched on 1st of December, and then we retreated. So all-time high is within striking distance. We're about 150 points away from that level. Just for the near term, on the downside will be yesterday's intraday low of 26,047. That becomes a key support level. On the macro front, we did get one data point for the Indian markets. The November core industrial growth came in at 1.8%. This is for the month of November. There was improvement in coal, cement, fertilizer. And this number, 1.8 core sector data, was an improvement compared to the October, which was just a minus 0.1%. Now, looking ahead for the day, there are no major domestic economic triggers at least. So some global cues will dominate. You will get the delayed US Q3 GDP numbers, where economists are penciling in a growth of 3.5%. The core PCE advanced estimate, again, critical for rate cut expectations. And finally, not to forget, it's the nifty weekly expiry. Nigel, the monthly expiry will be next Tuesday, but today will be the nifty weekly expiry.
Well, that's right. And today's expiry will be as big as any because, a lot of people will close out their positions today and not wait for the monthly expiry as well. But let's tell you first in terms of the cash market action, institutions were net buyers because the DI buying outweighed the FI net selling out. So, that was good news. Institutions have continued to buy in this market. And there were signs yesterday that there's a bit of a short covering bounce that's playing out. The Nifty ended higher, the Nifty Bank ended higher, and the open interest on both of them was down anything between 5 to around 6% or thereabouts. And that perfectly tallied in with what the FIs did, both on the index. There are signs of short covering out there. And even on stock futures, there was some kind of short covering on both those two parameters. So clearly there was a short covering bounce that played out and some long addition as well. And if you look at it, the last few days, at the start of the series, the net short positions were around that 85,000 contracts, 87,000 contracts short. Then it ballooned up to around 1.65 lakh contracts. And now that's back down to around 1.44 lakh contracts just in the last few days, telling you the power of short covering. And 21,000 contracts have got closed out, which has helped in terms of this bounce. Mind you, there is still very much net short. 89% of their positions are on the short side. Moving to the option side of things, well, yesterday there were clear signs that the FIs were writing puts, which gives you some kind of hope that maybe the lower levels will be supported. Just one word of caution, the PCR has moved to around 1.4. Normally, when it moves to the upper end of the range, 1.55, 1.6, you see some consolidation or a mild pullback. We're moving closer to the upper end of the range at around 1.42. And last week, I had pointed out that we were at the lower end of the range. And at the lower end of the range, you do see some kind of a bounce. But at the upper end of the range, sometimes, tells you the put writing is getting too easy. So keep an eye out, 1.6 is the upper end of the range. And that's because yesterday you saw writing 26,100 put, 26,200 put. On both those two strikes, the premium did come down drastically. So if you look at the technical levels and you look at the options data, the 20 DMA becomes very important, which is at around the 26,000 odd mark. That's where the options data is indicating support. That's where the 20 DMA is as well at. And the all-time high is 26,326. I think we get to that before the end of this year itself, just a couple of 100 points away. Probably even in today's trading session, the bulls will want to drive home the advantages. But they'll require, the support of the Nifty Bank because yesterday's trade, it was actually a bit of an underperformer, though we continue to see support at around the 58,500 mark, which incidentally is the 50 DMA. A stock that I'll be looking at today is Chola. The stock yesterday ended closer to the low point of the day. The stock was down close to around 3.5%. And there are massive shorts in the system. There were some unconfirmed reports, speculative reports actually. But a lot of sell-side analysts are rubbishing that. So, the shorts in the system, they may have to run for cover today. Chola is the stock, in fact, that I'll be keeping on my radar for today's trading session.
Okay, all right, Nigel. Thanks very much for that. So, a lot of cues to watch out for. I'd be looking at Coforge, which is the meeting for fundraising on Friday, as well as Granules, which has a fundraise board meet today as well. So, those are a couple of stocks I'd keep on my radar. But let's get in some global perspectives. Stephen Englander, who's the Managing Director, Global Head at G10 FX Research and North American Macro Strategy at Stancy Bank, now joins in this morning. Steve, thanks very much for taking the time out. I'm sure you're going into your Christmas break, but just wanted your thoughts in terms of where we might end up the year, considering that we're just about kissing distance away from record highs on the S&P, as well as for the Indian markets.
Thank you very much. It's always a pleasure to be on with you. Look, there's nothing that prevents the market from continuing the trends that we've seen. I think the issue is whether once we start serious trading at the beginning of next year, whether these trends are going to be maintained. Equity market trends, I think there's reason to be optimistic that investors are kind of looking at the potential for stronger activity than was expected earlier, stronger productivity growth, decent profits. So I think that that part of the market may be better supported. The question of whether inflation is as low as the CPI suggested whether the Fed cuts as much as the market is beginning to think. I think that could come back and haunt parts of the market at the beginning of next year, because I think the market's going a little bit too far in its buy-in of those data trends.
Hi, Steve. Good morning. Good to see you in. Getting into 2026, though, what kind of performance you're expecting from equity markets first? Because this year, clearly, you have the mother market that's done very, very well. And select emerging markets as well have done well. What would your pecking order be in terms of performance on equity markets in 2026? Does India feature top of the list?
Well, I wouldn't say it features top of the list, but it has surprised in terms of growth, and that could be supportive of Indian equity markets. But we're not that optimistic on how the rupee is going to trade in the coming year. This episode of dollar weakness, we think, is likely to be temporary. It could continue to year end, but probably won't continue into next year. What India has going for it is that growth keeps surprising on the upside, and that's hard to ignore in a world where growth is mediocre. But the competition does come from the U.S., and I think the question will be which market the investors choose to buy in.
Stephen, your thoughts on gold? Historically, gold was always seen as a hedge against recession, a hedge against geopolitical tensions, basically for diversification. So when there was instability, gold prices went up, and then when things calmed down, you saw gold prices retreat. But just the environment we've been, now it appears that geopolitical flashpoints are not episodic. It almost seems to be structural. We're constantly dealing with it. So with that backdrop in mind, do you think there is a possibility that, gold going ahead, I know it's had a fantastic run-up for the last 2 years in a row, but maybe gold needs to be a part of your portfolio in a bigger way now compared to what we thought about it maybe 5 years earlier?
Well, I don't know if it needs to be, but it certainly seems to be something that everybody's making a bigger part of their portfolio. And we expect gold prices to hit new highs. We don't think we're done yet with the gold rally, or the commodity price rally in general. I think what it's telling you, when you look at the two, asset markets that are really doing well, equities and precious metals, I think what it tells you is that there's some confidence in economic activity. And there's some confidence that money is going to be relatively easy. But there's not so much confidence in fiscal management anywhere. And so, gold is serving as a hedge, both against uncertainty, against geopolitical issues, and against risk. So, I think it's telling you that there's some fear of economic mismanagement, even though there's optimism about economies doing relatively well on their own, sort of independent of what policymakers are doing.
Steve, wanted to get your thoughts on the rupee as well, because it's been a rough year for the rupee. We've recovered from those record lows of around 91. We're holding above those levels at this point in time. But what's your sense? Where are we headed when it comes to the currency?
Well, we think we'll see the rupee above 90 again. We don't think that this is necessarily the end of rupee weakness. We don't think it's going to be a terrible currency, but I think it's surprised a lot of people on the weakness. I think we'd have to see economic growth really surprise us, and the RBI kind of really surprising us and in terms of the stance that it takes. But I think that if we're right that the dollar gains because of the strength of U.S. equity markets, U.S. productivity growth, the rupee won't be the worst currency, but it's not going to be the best.
Any levels that you have in mind where it could stabilize?
No, we don't think it's going to be terrible, but we see room for it to go back somewhat over 90. Nothing exciting in terms of where it goes, but not really seeing this as the beginning of an extended rally.
All right, we will slip into a short break on... Sorry, Stephen, we'll thank you for joining us. Let's also tell our viewers the interactions that we've lined up on the show today. So first up, 8:35, we've got Jyoti Gupta of Nirmal Bang joining in to discuss the cement sector and Ambuja Cement's board note for the amalgamation of ACC Orient Cement, what the swap ratio tells us and who does it favor. At 9 a.m., we will be joined by Harshit Kapadia of Elara Securities to discuss the railway sector amid the revision of ticket fares. IRCTC was in focus yesterday on the back of that. 9:20, Trideep Bhattacharya of Edelweiss AMC will be our market master for the day. 9:35, we begin Corporate Radar and the management of Masgao Docks will join in to talk about their outlook for the second half of the year. And following that, the management of Chalet Hotels will join in at 9:45 to outline their outlook for calendar year 2026. And towards the end of the show, former RBI Governor Decemeber speaks to Lata Venkatesh on the current rupee decline, foreign funds selling and the India growth story.
Time to slip into a short break. We've got a lot of stock-specific action to track for you in our special Top 10 segment. We're looking at ACC Ambuja, Orient Cement, HCL Tech, Ramco Cements, Prestige Estates, Anthony Waste Handling, Sangvi Movers and Paytm. They'll be reacting to positive news flow, while Bell Rise will be the only stock that will be reacting to negative news flow.
Welcome back. Still tuned into Bazaar Morning Call. Let's get our research team now. They're standing by with the CNBC-TV18 list of the top stocks that you need to track for today. Well, Nigel, we're going to kick it off with the entire cement space. We're going to see the big amalgamation of ACC and Ambuja. Tell us more.
Well, that's right. Finally, it's happened, right? The long-awaited and anticipated merger of Ambuja Cement's units have been announced, and it'll create one cement platform, for the group itself. The board has approved the amalgamation of ACC as well as Orient Cement, which will bring ACC, Orient, Penna and Sanghi, all of them under one entity. The ratio should come up for you on the screen. Ambuja will issue around 328 shares for every 100 shares held in ACC, which is pretty much in line with what the stock prices ended yesterday. And Ambuja will issue around 33 shares for every 100 shares that one held in Orient, which tilts the scales a little in favor of Orient shareholders because that premium is close to around 8 to around 9% or thereabouts. So you need to keep in mind Orient Cement, well, the stock price is less than half of what the initial transaction was done in at. For the time being, Orient Cement shareholders will be happy because it's not as bad as what they thought. Everyone was worried that the ratio is going to be very, very heavily stacked in favor of Ambuja Cements. The transaction should be completed in the next 12 months or so, subject to regulatory approvals. You'll be asking, what are the benefits? Well, it simplifies the group structure. If someone was giving a company discount, that goes away. Most brokerages were not giving that, but that's one positive. The second factor is it improves transparency, governance standards, because now that master supply agreement or that MSA or related party transactions, they are done away with. It also aligns with Ambuja Cement's plan to increase the cement capacity from around 107 million tons to around 155 million tons by 2028. And the management is also talking about 100 rupees per ton that they will gain from supply chain efficiencies. While Nirmal Bang analysts, well, they say that there could be an additional 40 to 50 rupees benefits over the next 2 to 3 years, which is expected from improved tax efficiency and working capital optimization. So those are all the benefits. Since there'll be some dilution, the promoter holding will come down to around 61% from around 68%. Net-net, amalgamation will have a neutral to a positive bias on the entity. The big gainer on all of this will be Ambuja Cements, because they are getting all the entities consolidated under one. They're getting scale as well as size. And Orient Cement, because that ratio is favoring those shareholders. So those stocks should react positively in today's trade.
All right, I'm going to watch for HCL Tech because HCL Software, which is a business segment under the listed entity, has made two acquisitions. The first one is they will be acquiring Jasper Soft for $240 million, which will accelerate the company's agentic business intelligence. So payout is $240 million. The company has not stated what the revenue of the acquired company is. The second acquisition is a smaller one. It's a Belgian startup, early stage, Wobby, which specializes, again, in AI data, etc. And $5.2 million is the payout. As I said, this is a smaller one, $5.2 million. And even the acquired company had negligible revenues, like 0.1 million euros. So, this is for HCL Software. So basically, HCL Tech has three key business segments. The big one is the services business. Second one is ER&D. And the third one is HCL Software. So all these three, so it's operated independently, but it's a part of the listed entity. So these acquisitions will feed into HCL Tech. But we know the payout, like close to about $250 million for the two of them, a little less than that. But we don't know what the acquired revenue will be. But the capabilities are clearly AI.
Okay, all right. The capabilities are clearly AI. HCL Tech, along with a lot of the IT stocks, did well in yesterday's trading session, so ended up the high point. But Vivek is here to tell us about Belrise Industries and why he's looking at that. Vivek, over to you.
Well, that's right. So Belrise Industries will be in focus. As per term sheet we managed to access today morning, we understand that one of the promoter entities called as Sumed Tools Private Limited, is looking to offload close to 6.56% stake of the total equity. Total size of the particular block deal that they're looking to pay the stake at works out close to 897 crore rupees. The offer floor price is at a close to 3% discount to yesterday's close, so 153.7 is where the floor price is at. After this particular block deal, this particular entity, Sumed Tools, will not have any stake. Now, the other thing to watch out for is whether this particular block deal happens in the block window itself, post which will be interesting to see how the stock reacts.
Okay, all right. Thanks a lot for that, Vivek. Ria is here to track Ramco Cements. Yesterday, towards the end of the trading session, they had made an announcement, I think 350 odd, and Prestige Estates as well. Ria?
Well, yes, Nigel, first up on Ramco Cements, the company has sold non-core assets worth roughly 515 crore rupees to Prestige Estates to pair its debt. And with this, so far, the company has disposed roughly non-core assets worth roughly around 1,017 crores versus their initial target of 1,000 crores. And apart from this, the company has also taken effective steps to dispose of further non-core assets worth approximately 200 crores. And this is to be done before February 28 of 2026. Moving on to Prestige Estates, they have announced the acquisition of a 25-acre land parcel in Chennai. The site is proposed to be developed into a large format project, and it has a development potential of roughly 5 million square feet. And the estimated top line potential from this is 5,000 crores. Now, the company has said that the location is well suited to meet the city's sustained mid-segment housing demand. And remember, in H1 of FY26, Chennai contributed roughly 4% to the company's sales. And overall for FY26, the company has guided for roughly 25 to 27,000 crores of pre-sales. And in H1 so far, they have already crossed around 18,000 crores.
Thank you. Moving on now to more stocks which are in the news. Vinny joins in. Vinny?
Hi, good morning. So firstly, we have Antony Waste, which we're expecting to open up on the green as one of its subsidiary has received a contract for development of 600 to 800 TPD mixed solid waste processing plant. This is in the state of Maharashtra. The contract size is around 330 crores. The time period for this contract, the tenure is around 10 years as well. So positive here. Sangvi Movers, we're expecting positive here as well. The renewable subsidiary of the company has secured a large work order for around 430 crore rupees. This is from multiple independent power producers. It's an EPC project that's come in with a combined capacity of around 270 megawatt. Lastly, we have Paytm also, where we could expect to see some bit of a green year. They've expanded into the overseas they're expanding their overseas footprint with new subsidiaries in Indonesia as well as Luxembourg. Other than that, the company's also said that its Paytm, Arab Paytm Payments LLC, which is the subsidiary of the company in UAE, is diluting some stake as a strategic investment. This is to Abar Global Opportunities Holding. That's a special purpose vehicle that will be created over here, and they'll be issuing them around 76,800 equity shares, which will represent around 49% stake post the issue as well. So total investment that would come in would be around 20 crores because of this. That's something that we'll watch out for as well.
Okay, bunch of stocks there. Thank you, Vinny, for bringing us all of those stocks in focus. Let's, in fact, quickly recap all of our top stocks. Stocks with positive news flow today are ACC, Ambuja Cements, Orient Cement, HCL Tech, Ramco Cements, Prestige Estates, Antony Waste Handling, Sangvi Movers and Paytm, while Belrise Industries is the only stock on our radar that is likely to see some red. All right, let's go across to Manisha Gupta, commodities editor. She joins in with a roundup with all the action from the commodity space in the market overnight. Manisha, over to you.
Thank you so much for that, Ekta. Well, I'll start with the precious metals because yet another day and yet another all-time high is what we are dealing with when it comes to gold and silver. So gold has gained 2% overnight and it's hit a new record highs around $44.85 an ounce. So we are inches away from that $4,500 an ounce when it comes to gold. Well, there's a lot of buying that has continued, fund allocations as well before they head for those holidays. And it's not just gold. Take a look at silver prices. We've seen 4.5% of gains here, and we are inching close to $70 an ounce. Gains also seen when it comes to base metals as a space. Copper prices gained up by 1.5%. We are trading at all-time highs on LME, 5-month highs on COMEX. Aluminum prices are trading at 3.5-year highs. You have nickel, which is trading at a 2-month highs. Zinc prices trading at a 5-month highs. So everywhere that you look at in metals, it is a strong gain. It is about supply concerns, dollar index trading on a weaker side as well. What is also gained in the Asian markets right now is the crude oil prices, with U.S. pursuing oil tankers off the coast for Venezuela and Ukraine continuing to strike on Russian energy factors. The crude oil prices in this week also are headed on a positive note. So $62 a barrel is back when it comes to Brent right now.
Everything is up. Gold, silver, crude, base metals. Manisha, thank you very much for that. We will slip into a very short break. On the other side, we'll put the spotlight on the cement sector. Jyoti Gupta of Nirmal Bang will join in, and special focus on the Ambuja Cement Board's nod for amalgamation of ACC and Orient Cement.
Welcome back. Well, let's get some fundamental analysis going. We have Parag Thakkar, Senior Fund Manager at Fort Capital, who joins us on the show. Hi, Parag. Good morning. Good to see you in Parag. Let's talk about the sector of the last few days, the NBFC space. Shriram Finance, they've come out with that big deal that the street was sniffing. The good news is, even after the deal that was much anticipated, you've seen the stock gain 6 to around 7% post-announcement. Your view on the stock, and also what does it mean for a company like Chola? It always enjoyed these premium multiples. Now there appears a bit of a shift that's taking place out there. But there were fears with regard to some kind of a Cobra post, and most sell-side notes that are coming out today, they believe that it's not anywhere close to as severe as what the street was fearing. So your view on both these names?
Yeah. So first of all, I would like to say that I have kept a huge conviction on financials all throughout because I have faith in Indian economy, and then financials are leverage proxy to play the economy, which is growing at 7.5%. Plus the credit cost across the financials are under control. And that will attract definitely a lot of foreign capital. And that has been, we have seen in so many cases, right? Yes Bank, Samman Capital, IDFC First Bank got money from Bogo Pincus. This one, various financials attracting a lot of capital, FDIs, I would say. Because here is a sector which can grow at 12 to 15% very conservatively. And credit costs are under control. So I would like to say, and Shriram Finance to be specific, it is a book value accretive transaction. Book value will go up by 20%. And ROAs will go to say 3.6, 3.7%. So even at today's price, it is right now trading at 1.9 times. So I would say that any fall in such kind of name will be a good buying opportunity once the trade fizzles out, and the people who have short-term trading profits, they book out. After that, one can clearly look at it. Coming to Chola Finance, I would like to say that I also read the Cobra Post thing. I also don't find anything material in that. Let's see if the market reacts very negatively, which I don't feel it will react. But if it reacts negatively, that will be a good buying opportunity in that name also. Because in vehicle finance, we have seen auto sales going up, right? Right. For example, October, November, MHCV volumes were good. Even December one data is showing 24% growth in MHCV. So I would say that vehicle finance, in fact, we have bought Tata Motors CV in last week only, which is current price around 410. We bought closer to 400. So I'm saying that I have a positive view on this NBFC space as well as especially vehicle financer names, whichever comes. So I think the Chola can provide opportunity, but let's see. As you rightly pointed out, all sell side guys and including buy side guys like me, we don't believe in this note of Cobra Post. Let's see. And Murugappa is a trusted management since last so many years. So, although the valuation of Chola is slightly elevated, I would say. Even today, after such a big run in Shriram Transport is cheaper than Chola.
Okay. Well, basically, the Cobra Post, for those of you who missed it, Cobra Post is alleging that, with Chola Mandalam, there are transactions upwards of 10,000 crore rupees, which are related party transactions, involved in a network of the Murugappa Group entities, to which analysts saying that this payments made by Chola to other companies within the entire, Murugappa Group is industry practice. They also went on to say, analysts have said that they don't find the remuneration paid to auditors' fee excessive. The payment of fees which are made to credit rating agencies are also a global practice. For at least for now, the allegation by Cobra Post seems to be related to related party transactions of 10,000 crore rupees, which analysts, at least as of now, don't find very concerning. But we'll wait by to see if there is any official confirmation from any official word from the management. Parag, yesterday the big stock was GE Vernova TND. Do you look at that? I mean, what is your view on HVDC? I mean, stock has had a fantastic run up, but from here on?
No, so I will not comment on the stock's specific name in this sector because we don't own this sector's names. But I would like to say that, one of the biggest bottleneck in the power sector today is transmission. So any company which caters to transmission space and where it has a good competitive position will do well. Now, valuations is a different ballgame. Most of the companies in this space are very richly valued. So that is why we have ignored this space. But definitely, from need of the ecosystem perspective, definitely transmission grids needs to be strengthened significantly, and all the players in the ecosystem will benefit.
Got it. Parag, request you to stay with us. Let's focus on the big cement amalgamation that was announced late last night. Ambuja Cements, they approved the amalgamation of subsidiaries ACC as well as Orient Cement with the company to create a pan-India cement powerhouse. Jyoti Gupta, Senior Research Analyst at Nirmal Bang Institutional Equities, joins us on the show. Hi, Jyoti. Good morning. Good to see you win. Luckily, you're not traveling. A lot of analysts got stumped out. Suddenly, out of nowhere, at around 9 p.m., this announcement did come in at. But tell us, what are you making of it? CLSA, they put out a note. They're saying that the amalgamation of ACC Orient with Ambuja will lead to 10% value accretion for Ambuja shareholders as per their scenario analysis. Do you have a number with regard to how much of value accretion could be there for Ambuja shareholders?
Good morning and thank you for having me on the show. So, this proposed merger is definitely will have a significant impact on Ambuja Cements. It'll actually address long-standing structural inefficiencies that persisted since the wholesale era. And for shareholders, I think the value accretion should be higher, more than 12%, as per my numbers. So 10-12 possibly currently at this point of time, but maybe going forward it should be higher for the shareholders.
Okay, all right. And, I guess there is a bit of an arbitrage that's there for Orient Cement holders. But, some minority shareholders, whether it's on my LinkedIn or various other platforms, they've been writing to me. They're like, Ambuja bought this asset at around 395 rupees or thereabouts. And now they're doing this merger at 170, 175 rupees. Any comment on that? I mean, there's a 9%, premium in comparison to yesterday's close price. But you want to comment on that?
I think you won't see much for minority shareholders. It would be anywhere between 7 to 8%. I think 9% also for me. I think it's a little high. I think somewhere around 7 to 8% is what you should expect.
All right. So, net, Ambuja is the way to play it. Could you tell us what is your current target price that you have? And also, I was going through your note, besides the 100 rupees that the management is talking about in terms of savings, you are factoring in another 50 to around 60, 40, 50 rupees or thereabouts. Explain that to us.
So basically, I see, there will be working capital and tax benefits which are likely to come over a period of 2 to 3 years, mainly from optimization, which are going to support the cash flow generation. Also, what you need to see is the impact of process, which I think is excluded from this entire, cost saving metrics. So that should also have an impact of 160 to 200 rupee per ton. So basically, synergies plus process plus your, overall, the tax benefits of 40, 50 is what I'm saying. I think broadly it'll be the same range. So that's the kind of improvement that I see from this merger.
And Ambuja Cements moves to around 1,500 rupees of EBITDA per ton in the next few years. Is that something you're factoring in?
I think 1,500 plus by FY28, it should happen.
By FY28. And in your pecking order, could you tell us where does Ambuja come in? And what is the target price currently you have on Ambuja Cements? Will you tinker with it?
I think my Ambuja has been my top pick in large caps, followed by Ramco and Nuvoco in the small caps. So that has never changed in the last 2 years, ever since I joined as a research analyst. So and my target price is anywhere close to 690. I think it should surpass my estimate as well.
Okay, just a quick word, getting into 2026, that consolidation has taken place. The top 5 players from having 50% of the market, in the next couple of years, will go to around 65% of the market. And now some of these acquired assets are going to ramp up, plus we have additional supply that's coming in there. In this sort of a scenario, will you play the large caps rather than the mid cap, small cap companies?
I will play Ambuja in the large cap, but having said that, you see the additions which are coming is basically grinding capacity. So when you have grinding or blending capacities coming in, we don't take that as an increase in capacity supply. It's always a clinker units. If you are adding more of clinker units is where I say it's an addition to supply, but not for grinding and blending units.
Got it. Okay. All right, Jyoti. And since you're with us, for the cement industry, everyone talks about those green shoots, but then those green shoots, they just move away. The kicking the can down the road has been taking place for the last few quarters. How are you reading the demand scenario as of today? If you could help us out, because there was some slowdown in October, November, then there's a pickup in December. Birla Corp's management as well indicated the same. On demand as well as on pricing, how are things looking for the Q3?
So as far as I understand, Q2 has been very good on a low base. Third quarter, we are sitting somewhere at an 87.5 million ton industry number, slightly higher for Q3 FY25. Now Q4 October month was Q3 October month was slightly weak. Still, if I say it was flat, November was a double-digit growth, and assuming that December is again flat, which is not the case at all, we should still see a high single-digit for the industry, or maybe for some large players, a double-digit growth as well. So I don't see the demand looking. In fact, I met somebody yesterday who said that Eastern UP is very strong around double-digit growth. South is doing very well. West is stable. North is doing very well. East is around 3 to 4%. So I'm not really looking at a low single or a 5 to 6% growth. It would be higher for the industry. Fourth quarter, definitely it's going to be very well. We may expect price increases maybe in the month of Jan, while the volume will dominate the quarter from mid of January. So overall, Q3, Q4, and Q1 of FY26 definitely look very well to me.
Okay, all right, Jyoti, we're going to leave it on that note. Thanks very much for joining in. So the management has said that around 100 rupees per ton would be a saving or synergies that we would eventually see from this amalgamation. But Parag Thakkar is still with us. Parag, let's shift focus away from the entire cement space. Just wanted your thoughts on Prestige, because they seem to be going quite aggressive in terms of land parcel acquisition. They've acquired a 25-acre land parcel in Chennai with a revenue potential of around 5,000 odd crores. Any thoughts in terms of how you'd approach that stock?
So we don't have prestige estates in our portfolio. We have DLF, and we always like DLF and Aurora Realty in the real estate space. And real estate space is right now going through a little bit of sluggish phase, as reflected by stock prices also. But in my view, in medium to long run, lower interest rates should benefit this sector. And hence, we remain positive on DLF. DLF is a huge rental income, the business which I love the most.
Okay, all right. Well, Parag, we need to take a break on that note. But up next, we're going to get talking on the technicals. We have Sudarshan Sukhani joining in and Nitish Thakkar to tell us what they're tracking today in terms of the techs. Welcome back. Well, let's get in some more statistics now. We have Hormuz joining in. He has all of the big movers in terms of data and which saw heavy volumes of trade yesterday. Hormuz, over to you.
Good morning, Ekta. And lots of broader market names that were moving, and railways was one such theme that was doing well yesterday, and particularly on strong volumes. And one such name was Jupiter Wagons, that was up almost 20% in yesterday's trading session. It was the biggest single day gain that the stock saw since June of 2020. And volumes on Monday, of course, they were the highest on record, and they were the sum total of the last almost 70 sessions put together. And 7.5 crore shares were traded on Jupiter Wagons yesterday. The 20-day average is less than 8 lakh shares. Now, but however, despite the very high trading volumes, the delivery volumes are very low. Only 6% of the total traded volumes are marked for delivery of 44.5 lakh shares compared to a 20-day average of 3 lakh shares. And the stock has been a bit of an underperformer, down around 43% from its 52-week high levels of close to 550. Now, Infosys was the other one. The stock was in the news over the weekend with all the news that it garnered with regards to its ADR. The stock did well in yesterday's session. The volumes were the highest since July of 2024. The 2.5 crore shares were traded yesterday. The 20-day average is only 80 lakh shares. And here you saw significant delivery-based buying because 75% of that was marked for delivery. Almost 1.75 crore shares were marked for delivery yesterday. 20-day average of less than 50 lakh shares, and the stock is now just 6% away from its buyback price of 1,800 rupees. You have to keep an eye out today because the ADRs yesterday were down around 5.5% overnight. And lastly, Cross Limited, we've mentioned about this in our Under the Lens segment as well, and the biggest single day gain since November of 24. Volumes were the highest in 4 months. 28.5 lakh shares traded, 20-day average of less than 3 lakh shares. 7.5 lakh shares marked for delivery, the 20-day average of less than 1 lakh shares. The stock is now nearing its IPO price of 240. Now, why that is significant? Because it has never traded above its IPO price, which is 240 rupees a share.
Got it. All right, Hormuz, thanks a lot for that. Let's hop across to Sudarshan. He's gone through a lot of brokerage notes. Sudarshan, what are you picking up?
Good morning, Nigel. So I'll start with Pine Labs. Morgan Stanley has initiated coverage. Pine Labs got listed in the month of November of 2025. And now Morgan Stanley has initiated coverage with an equal weight call. And target here is 260. And that implies an upside of almost 12% from current levels. It believes that company is a leader in its focus segments. And also it benefits from first mover advantage and a strong partner ecosystem. It projects 19% revenue CAGR over FY25-28. And the shift towards an asset-light model to drive EBIT margin to 20% by FY28 versus 3% EBIT margin that company reported in FY25. But it has an equal weight call because valuations as per Morgan Stanley is fair at the current levels. Second one is Nuvama has returned on Century Ply. It is a buy call and target here is 1,028 per share. It believes that company is confident of achieving rupees 12,000 crore revenue target by FY31, and that is basically targeting 18% CAGR. Some of the catalysts that it has mentioned: plywood execution is strong, MDF margin shall turn around from S2 of FY27, and laminate's turnaround is in progress, and particle board to record EBITDA break-even by Q3 of FY26, so basically this quarter.
Thanks a lot for that, Sudarshan. Parag Thakkar is still with us. Parag, any of those stocks you like? Century Plyboard, Pine Labs, the few brokerages that...
Sorry.
Please go ahead.
We have Greenply in our portfolio. We have recently bought Greenply in our portfolio, where we feel that, again, as this report also highlighted, MDF can revive, and they are putting up a new plant also. Plus, plywood will grow at 10%. I think, and in last quarter, there was a shutdown, so I think margins will also revive. So we hold Greenply in our portfolio as a disclaimer. Of course, your investors are please advised to take advice of their financial advisors and then take a call. So this is a stock we like.
And Greenply trades at a sharp discount in comparison to Century, if I remember correctly.
See, the market cap is too small compared to the brand value which it has. It might do a revenue of 2,800 to 3,000 crore next year, and the entire market cap is 3,300 crore only with 500 crore net debt. So enterprise value is below 4,000 crore. It's a branded business which trades at 1.2, 1.3 times EV to sales.
Okay. Parag, have you looked at Bellrise? That large block or large trade which was supposed to take place has now been executed. It's worth around 897 odd crores. It's a recent listing. Any thoughts on that counter?
No, so we have not studied this stock very precisely. But I would be constructive on many auto component names. We have many other names in our portfolio which are auto component, like NRB Bearings, Minda Corp, and the various other auto component names we like, and especially now CV suppliers also. So, but not any specific view on Bellrise.
Okay, all right. Parag, I believe there's a fundraise meet for Granules as well. We'll be trying to get the management post that. What's your view on the stock?
So Granules is a stock which is one of our largest small cap holdings since long, after the stock corrected from 725 to 450 levels due to that Hyderabad unit inspection. We believe that, see, if even after that unit not operating optimally, this company is, for example, Q2, their earnings were up by 30% YOY. Net debt to EBITDA is below 1x. So it's a huge cash flow generation and 15% and above ROC. So I would like to say that a company growing at 30%, that to in a finished dosage form, which they supply to US, and their US business is doing extremely well. So in my view, it's a company with 14,500 crore market cap, net debt of below 1,000 crores, and it is going to generate 1,000 crores cash profit next year. So 6 to 7% cash flow yield, above 15% ROC. So still very constructive on this name, although we have bought it from very lower levels.
Okay, absolutely. Well, anyone who bought it at its 52-week low of around 421 odd rupees is sitting on good gains of over 40%. It had hit those levels earlier this year and very close to its 52-week high of around 621 rupees. So going in strong into that fundraise board meet, which is scheduled for today. We'll take a short break on that note, but we'll come back with the pre-opening, and also with us will be Harshit Kapadia of Elara Securities to discuss the railway sector amid the revision of ticket fares. And we will be connecting with Sudarshan Sakani and Mitesh Thakkar for some tech calls as well.
Welcome back. You're watching Open Exchange live from the CNBC-TV18 Motilal Oswal studio. Now, Chola Mandalam investment has been under pressure. For starters, the street was comparing the valuation difference between Shriram Finance versus Chola, and after the MUFG deal, the street got bullish on Shriram Finance and Chola came under pressure. But yesterday, as you can see in the last 1 hour, the stock saw accelerated selling pressure and ended down about 4%. Now, there was a Cobra post which alleged corporate governance issues in Chola. And that's what perhaps got the street worried. Gaurav is now joining in to tell us first what the Cobra post alleged, what are their key concerns, and if he's heard from anyone from the analyst community with respect to a response or how one should look at these allegations.
Well, as local journalist group Cobra Post, they reported some allegations against Cholamandalam Investment, and this is because of some governance gap that they found in the reporting. So first, let's understand what are the key allegations that they have made. They say that around 10,000 crores worth of related party transactions were concluded in Chola, which includes the Murugappa Group entities and which merits close regulatory scrutiny. In fact, to note that, they also say that Cholamandalam diverted amount worth more than 6,000 crores since 2015. Apart from that, they say that Murugappa Group, they reported cash value worth more than 25,000 crores in the last 5 years, which is actually high, unusual, and indicates asset quality risk for Cholamandalam Investment. They say that they are reporting some kind of raised red flags on the share of increased auditor fees as well, which was in the range of 1.2 to 1.4 crores in the last 2 years. Related party transactions, there also they see some kind of discrepancies which suggest non-disclosure and non-compliance. If you take an example, they say that company reported around 940 crores worth of income earned via commissions by selling insurance, which could be in non-compliance with the IRDAI regulations in FY25. Apart from that, they say that company has also reported some payments which can be questioned, and this is regarding the Murugappa family members. Lastly, there are some concerns regarding payment of fees, regarding the credit rating, and some concerns regarding underwriting practices as well. If you look at the analyst community, we know that Chola is a very reputed name, and if you look at some of the analyst view, they believe that these concerns are not something which are new, and second is that these are not actually accurate. In fact, in terms of cash deposits, analysts believe that it is actually a positive because it constitutes around just roughly 12% of Cholamandalam's cash collection. In terms of insurance, they say that many companies have changed their reporting standard in FY25 in terms of insurance income, and that is the reason they are seeing some spike, specifically in the standalone numbers. In fact, on the consolidated number, it is not a sharp spike to say. When it comes to payments to Cholamandalam MS, which is the insurance arm, it is actually industry practice as per analyst. They also believe that the auditor fee is not something which is a concern. It is not something that can be higher at this point of time. And payment regarding the fees to credit rating agencies, it is actually a global practice. And lastly, analysts also said that they will be waiting for any comments from the company. So definitely we will be also waiting on that. Remember, at 3 p.m. today, Cobra Post is going to hold press release. So let's see what they have to say on that. But all in all, because of this, we saw some accelerated spike, a decline in the stock yesterday. Let's see if it holds or if it slides even further in the day today.
Okay, all right. Thanks very much, Gaurav, for that. So, Chola, that stock ended at the low point of the day yesterday. It's lost around almost 8% just in the past 5 days. But nonetheless, let's get back to the technicals. We have Sudarshan Sakani as well as Mitesh Thakkar with us. Sudarshan, you go first. What would your tech calls be at this point? Say for the indices first.
Yeah, good morning. Well, yesterday the suggestion was to look to buy the indices either on a dip or on a minor consolidation. So if you've taken that trade, hold on to it, keep 150 point stop loss from your entry points or somewhere around 26,100 and stay long. Now, in case you haven't had a position or you have exited it, there's a buying opportunity coming today also. Primarily, the index is now suggesting that slowly and steadily it should cross the previous highs and go higher. We'll see what happens, but that is the sense that I'm getting. So buy the Nifty on a minor dip, on a minor consolidation, keep a tight 150 point stop loss and stay long.
Okay, so looks like the uptrend is intact and maybe we should prepare ourselves for fresh milestones. So buy is the call coming in from Sudarshan. Mitesh, what about you? What's the approach to trade?
Good morning. Actually, yesterday we had some ideas that the index could possibly go higher than the previous highs, and I suggested a target of around 26,380, possibly 26,400. The only condition was that we need to clear this 26,200 1020 mark. So I think we are most likely heading towards those levels. So we'd already taken some long ideas, long positions on the Nifty. And now I think once we open around this 26, 220, 230 zones, maybe take part profits and revise your stop to about 26, 145, 150 zones, which is where we started taking longs. So the idea is that, yes, we are positively biased, at least in the short term, and a fresh hike we've been offering. Because, we have been making higher highs, the next supply line, that pivot of the supply line is at about 26, 380, 400, and that's why this target comes into picture. Beyond that, I think it could be a very fast momentum break on the upside.
Okay. Mitesh, what about your stock calls?
Yeah. So on the stock side, I have more buys compared to sell. A buy on Uno Minda with a stop at 1274. Look for targets of around 1335 here. Bajaj Auto is a buy. Keep a stop below 91.30. Look for targets of 92.40. Persistent made a fresh swing high, so buy here as well with a stop at 65.20 for targets of 66.50. And one sell call, that's Hero Motors. It's been seeing some kind of a profit booking led correction. So if it breaks 56.80, it's about 20 points higher from there. So if it breaks 56.80, take a shot with a stop at 57.21 for targets of 5,600.
Sudarshan, your stock calls?
Well, it's also an all buy list. HAL is a buying opportunity with a stop under 42.90. I have some small shares in HAL. BSE is a buy with a stop under 27.20. IRFC is a buying opportunity with a stop under 115. And Indian Bank comes again in my list as a buy with a stop under 770. This is a good time. We're probably getting the Santa Claus rally finally. So stay only on the long side.
Okay, thank you very much for that. Now moving on, the Indian Railways announced a revised fare structure starting from the 26th of December. The hike is expected to add about 600 crore rupees in terms of an additional revenue for FY26. To discuss this, the railway capex outlook not too far away from the budget as well. So street expectations have started coming in. Harshit Kapadia of Elara Securities is now joining in. Harshit, morning, and thank you very much for joining in. So first, let's talk about this railway fare hike. Give us the quantum, the impact, and who would the beneficiaries be?
Morning. So basically, this fare hike has been mainly on the coaches, which is going mainly on the longer distance side. The major beneficiaries would be definitely IRCTC. On the Indian Railway side, as far as the revenue is concerned, and is expected close to around 600 odd crores kind of revenue is expected to be additionally backed by the Indian Railway on the initial estimates which they have done for the 26 year. Going forward, this has been going to be a trend is what we see, because this is what the Indian Railway plan was, to increase the passenger fares as well as to reduce the freight cost. And that's where they wanted to get more volumes out of it, as well as the subsidization which they are giving on the passenger fares is something which they are looking to reduce. That's the overall goal. Given that the cost, which is railways right now facing, cost to income ratio is close to around 97% or more than 97% in an average year. So that's where the logic is.
But the stock didn't react too much. You're saying the only beneficiary is IRCTC, but the stock yesterday was only up 1%. Year to date, it's down 13-14%. What is the view on IRCTC per se? If this is a material 600 crore increase in revenues for the company, shouldn't it have reflected in the in terms of the stock price?
So this is an estimation done based on how the passengers, a number of passengers travel on the Indian Railway, especially for the moving from one station, not within the cities, but on a longer distance trains. So this is just an estimate. Probably this will be, looked over a year and how things improve, plus how passengers also take these kind of fares. Earlier, these kind of intervention by the Indian Railway was negatively put, and they had to then resort to the older price levels. So that's where so people would be, basically looking whether this is going to swiftly go through or pass through, or there could be some hindrances. So probably that could be one reason why the stock reaction has not been that great.
Okay. All right. Well, Harshit, you know, there was a cabinet approval of projects worth almost around 25,000 crores as well. What is your sense in terms of who the beneficiaries would be for that? It is mainly aimed to enhance connectivity to approximately over 3,600 villages.
Right. So largely, when we talk about connectivity, the largest beneficiary has always been RVNL. Followed by ERCON and then RITES in terms of distribution of projects, where more than 60% of the project goes to RVNL, 30% goes to ERCON, and 10% goes to RITES. This has been the trend for multiple years within the PSU bracket. Now, even private sectors are also participating, but there are some hiccups where private sectors are not directly participating, but they're taking orders from the PSU. So PSUs are getting the orders, and then the private sector is taking those orders on terms of execution. So the major beneficiary will be RVNL.
Do you think that they can reverse this underperformance that they've seen? RVNL is down around 20% on a year-to-date basis. We have ERCON, which is underperformed as well. We're going into the budget as well. Would you, one, expect this kind of underperformance to reverse? And two, would you take positions ahead of the budget?
So the major question that one has to see how the budget movement happens, because the entire railway capex is only spent via budget. The railway additionally doesn't have much income left because the expenditure or subsidization is high at the Indian Railway level. So if the budget increases from 2.65 lakh crore to 3 lakh crore, and that was the vision which the Indian Railway was giving, given its Indian Railway 2047 plan. So based on that, if you look at, then probably we will be moving towards the 3 lakh crore number. Whether it will happen in next year or next 5 years is something that people will be watching out. So that has to swiftly move, the budget number. That is where you will see the interest coming back on the railway stock, whether it is, companies like IRCTC or the EPC companies or the equipment manufacturing companies.
So which stock are you most bullish on, Harshit? Because across the board, as Ekta was pointing out, this year we've seen a correction, a retracement in the stocks. So from here on, any buys?
I would see one stock as a buy where rail and metro both are going to see a very strong pickup because they already have got orders. We are awaiting execution to happen. BML would be my top pick within the space, followed by RITES Limited. Those are the two names that I would prefer on the railway side.
And for BEML, I think your target price is 2,700. Is that correct? So that's a sharp 50% upside from current level.
Absolutely. So if you look at the company has almost 17,000 crore order book and the major part of railway as well as metro orders, which is mainly more than 11,000 crores, is likely to be executed over next 3 years time frame, starting this as in FY27. Bangalore Metro, Chennai Metro, LHB coaches, plus delivery of Vande Bharat, all is coming together for this company in FY27. So that is a company to watch out for.
Okay. All right, Harshit, we couldn't let you go on that note. Thanks very much for joining in and giving us all of those details with regards to the entire railway space. Let's, in fact, now go across to Sudarshan. He has one stock in focus, Samvardhan Motherson, as the company's acquired Nexon's auto wiring harness business. Sudarshan's here with more details on that. And this is also our bull versus bear segment. So he's getting us both the perspectives on this. Sudarshan, go ahead.
Good morning, Ekta. So this stock has been in the focus since the Q2 earnings, and the stock is near the record high, up more than 70%, one of the biggest outperforms if you talk about the auto segment as well as the auto ancillary segment. Now today there are two reports. One is bull, another is bear. So first I'll talk about the bull, and that is the Nomura. It maintains buy call, but it does not see the big up move from the current level. It has a target price of around 125 per share, and the current price is around 123. And it says that company is going to acquire Nexon's autos wiring harness business and to foray into global PV wiring harness segment. And this acquisition is done at attractive valuation and potential transaction to be EPS accretive, and is attractively valued at 4.3 times CY24, that is EV per EBITDA. and could potentially lead to EPS accretion of 2% in the first year itself of the acquisition. But Kotak Institutional Equities has a sell call, and here the target price is 95 rupees per share. So Kotak believes that share is going to fall from the current levels of around 123. It believes that acquisition to be marginally EPS dilutive in the near term, and muted global PV trends and expensive valuation underpin the sell rating by Kotak Institutional Equities. But as far as the company is concerned, the demand has improved. Auto demand, if you talk about, has improved over the last few segments, both on the domestic front as well as the export front. So that's one of the reasons that why you are seeing a big up move in not only Samvardhana Motherson, but in most of the auto companies and auto ancillary names.
Okay, all right, sir. Thanks a lot for that. Well, let's go from Sudarshan, who's from our team, to Sudarshan, who is our technical expert for today. Sudarshan, what's your 9-10 call?
It's HAL, buy HAL with a stop under 42.90.
Got it. Okay, all right. What about you, Mitesh?
I'll go with the buy on Bajaj Auto for targets of roughly around, I think, just a minute, sorry. I'll go with the buy on Bajaj Auto, and we'll look at upside targets of around 90 to 40.
Got it. Okay, all right. Thanks a lot for that, gentlemen. Let's focus then on the long-awaited and the much-anticipated merger of the cement companies. That's Ambuja Cements. The units, well, the merger has been announced, which will now create one cement platform. The board has approved the amalgamation of ACC as well as Orient Cement with Ambuja. What are the ratios? Ambuja will issue close to 328 shares for around 100 shares held in ACC, which is pretty much in line with what the close price was yesterday. While Ambuja, well, they'll issue close to around 33 shares for every 100 shares held in Orient Cement. That tilts the scales in favor of Orient Cement shareholders, which is reflected in the, in the initial opening that we're likely to see. The transaction is expected to be completed in the next 12 months. That's subject to regulatory approvals. Let's highlight the benefits, though. 1, it simplifies the group structure and reduces the holding company discount. 2, it improves transparency and governance standards via elimination of the master supply agreement and the related party transactions. It also aligns Ambuja Cement's plan to increase the cement production from ballpark around 107 million tons to around 155 million tons by 2028. The management targets cost savings of around 100 rupees per ton from the supply chain efficiencies, while Nirmal Bang also says that there could be an additional 40 to 50 rupees per ton benefits over the next 2 to around 3 years. That's expected from improved tax efficiency and working capital optimization. The promoter holding, because of the dilution that we're likely to see, will come down to around 60.9% from around 67% odd. Morgan Stanley, they're bullish on the stock. They say that it's a positive development. It removes the overhang of managing multiple listed companies under Ambuja Cements. And they say that this will be viewed favorably by shareholders as well. CLSA, they've quantified it. They say the amalgamation could lead to 10% value accretion for Ambuja shareholders as per their scenario analysis. Net-net, amalgamation will be viewed with a positive bias for the entity on the whole. So, good news coming in, but it was on expected lines.
Okay, all right. So that's on the entire cement space. Just want to point out that Biocon is going to be in focus as well because they have announced that they will be securing full and exclusive global rights for the biosimilar adalimumab. This is basically from Fujifilm Kyowa. So under this new agreement, Biocon Biologics will assume end-to-end responsibility for this biosimilar when it comes to manufacturing, commercialization, along with rights for any additional development activities. So that's the piece of news which is coming in for Biocon. Puravankara was also in focus because there was an announcement of a 50-acre land that they will be acquiring. So that stock would be in focus as well. But let's also recap, or let's recap all of the top stocks that we covered earlier this morning and which will be in focus. HCL Tech will be in focus on account of acquisitions, Ramco Cement, Prestige Estates, Anthony Waste Handling, Sangvi Movers, Paytm, Bellrise Industries, ACC, Ambuja Cements and Orient Cement. All of these stocks will be in focus.
Okay, let's get the rupee rate as well up for you on your screen. Yesterday, the Indian rupee depreciated a tad bit after closing higher for 3 consecutive sessions. Yesterday's closing was 89.65. Today's opening is 89.61. So pretty much at those levels. So that's the dollar rupee rate as we kick off trade. For the Indian markets, the GIFT Nifty is suggesting, actually we've got the pre-open now, and that's up close to about 32 odd points. So it's suggesting a mildly positive start, building on the rally that we had over the last 2 days, where the Nifty gained 350 points and the sensex added close to about 1,000 points. We are supported by positive global cues. Wall Street ended with a gain of nearly 0.5%, and Asia this morning too is tracking mildly in the green. The question is, will the seasonal rally push the indices higher into year end? Can we make a dash towards our all-time high levels of 26,325? The pre-open is at 26,200, which means we're about 125 points away from that. That's the Asian market picture in the green now. So globally, global markets are being supportive for the rally for the Indian markets to continue into the third day.
Well, that's right, Ruma. And the stocks that we had highlighted, Orient Cement is reacting positively because the ratio that they've given with regard to the number of shares that you'll get for the shares that you have in Orient Cement, that's favoring actually, Orient Cement shareholders. The stock is less than half of what it was at its peak. So explains why Orient Cement has opened gap up. And the ultimate beneficiary of this entire merger will be Ambuja Cements. So that one as well is up close to around 4.5% or thereabouts. ACC trades at a discount. That entity is going to be merged into Ambuja Cements. So good times in terms of synergy benefits as well. So all those three stocks have opened up in the green. But I think we've got just 10 seconds before the market opens. And it's going to be a positive one, heading towards those fresh all-time highs on the headline index.
Okay, 2, 1 seconds. The bell has gone and the first tick on the Nifty is in the green. The Nifty opens shy of 26,200, but it's actually a flat opening. It's green just for saying. It's an absolutely flat opening for the Nifty and the Sensex. So after a 2-day heady rally, markets are pausing, consolidating. Mid-cap index also absolutely unchanged. The big gainers today on the way up, Shriram Finance, that continues to rally, 940 on that. Of course, the day gain today is far more modest, just up close to about 0.5%, but it's added on a significant bit over the last 2 trading sessions. You've got a Coal India, SBI Life, Cipla, where you're seeing some modest gains, up close to about 0.3, 0.5%. Coal India has now moved to the top Nifty gainer. On the way down, I think the only notable profit booking is visible in IT names. The Nifty IT index had gained for 4 consecutive trading sessions on expectations of Fed rate cuts going into 2026 as well. So IT was rebounding after oversold levels. But today you are seeing correction, a profit booking. The top 3 Nifty losers, Infi, Tech Mahindra, TCS, all belong to the large cap IT pack. BEL, where Elara Securities was just telling us very bullish. Their target, sorry, that was BEML. BEL is seeing a bit of a correction. That's down also close to about 0.5%. The rise in crude prices is putting a bit of a pressure coming on Asian Paints. Sun Pharma, HDFC Life also opening in the red. On the way up, you've also got now Coal India. We spoke about that. That's up 1%. L&T, Interglobe Aviation seeing buying. And metals, clearly the sector of the year. The metal index is up 23% year to date. And today, buying is visible in Hindalco. Hindalco this month only has added nearly about 8%. But quiet, it's flat for now. It's a red tick. But let's see as the day progresses whether we can pick up some momentum on the way up. Volumes too are on the thinner side, and today is the Nifty weekly expiry.
Well, that's right. The point on metals at the start of this month, we had highlighted that aluminium could be, one of those metals to track, which was actually underperforming. Hindalco, as Rima mentioned, is up 8%. Nalco, I think, is up more than 10%. And Vedanta, obviously, that demerger got the green signal. That as well is up close to around 10%. So that aluminium trade clearly is working out. I'll tell you the stock of the morning. It's Chola Investment. And the reason is because that much feared report with regard to pointing out various, shortcomings, that's not as bad as expected. In fact, the street has made those shorts scamper for cover. The stock is up 4.5% as we speak. Massive up move is what we're seeing out there. Yesterday, the short addition was close to 10%. Today, all of that is, there is some unwinding out there, and there is some unwinding of those short positions. Explains why the stock has moved up. Ambuja Cements holding in the green with a gain of close to around 3%. But ACC, well, the street always expected the ratio to be in favor of Ambuja Cements. It trades at a discount, but no interest at all in that stock, despite having very, very favorable valuations. Dalmia Bharat up 1.4%. You have Coforge is down close to around 5%. Infosys is coming for a bit of a breather. So that stock is well under some pressure. Canada HSBC Life Insurance, the stock is up close to around 9% and the volumes are very, very high. So that one should come up for you on the screen. And Bellrise, promoter entity, had to sell some shares. That large trade got cleared out of the way. Stock up close to around 7.5%.
Yes, in fact, I think after Bellrise, the other big stock that you need to watch out for from the broader markets is Anthony Waste. So that stock is up around 9% and volumes are picking up on that one as well. And it's rallied quite significantly in the past couple of days, though year to date the performance hasn't been great. We have Orient Cement, which is up around 7%. We have Sangvi Movers, where there was news on that one as well. So that stock is up around 5.5%. Ircon is seeing follow-on buying, so that stock is up around 2% from the railway space. But remember, it's an underperformer year to date. It's lost around 25%. RVNL is also seeing some amount of traction on the upside. Biocon, there was news with regards to their biosimilar. So that stock is holding with a gain of around 0.8% at this point. On the downside, just watch out for a couple of these stocks such as Newlin Labs, Cohance Life, Pratap Snacks. Nothing really stands out considering that it's more of a quiet day. But on the upside, a couple of these stocks are definitely moving on the back of news at this point in time. Chola Investment now at the high point, up around 5% for that particular counter. We have a couple of others such as Chola Finance also, which is holding up with a gain of around 1%, unperturbed by the Cobra Post report, you'd have to say. Meesho, that one continues to decline. In fact, that stock has lost around 14% this week itself. So just watch out for Meesho. We have Grow as well, which is just about a little weak. So down around 3% of Physics Wala, which is down around 1.5%. So a couple of these new listings are taking it on the chin this morning. All of them down and out a little bit at this point.
Okay, let's get in. Trideep Bhattacharya, CIO, Edelweiss AMC, joining us on the show. Trideep, can we say season's greetings to you? I'm not sure whether we'll have one more interaction before we close out the year, but great to see you this Tuesday morning.
Good morning.
Hi, good morning. So what's the call going into 2026? And then if you could tell us about the underpinning of optimism, because 2025 has been a bit of a challenging year. So the underpinning of optimism going into next year is a pickup in earnings. What are your channel checks suggesting about how Q3 is going to shape up in terms of an EPS growth, the sectors which will lead, the sectors which will lag? And is there any risk of an earnings disappointment? I mean, tell us, based on your interactions with the managements, in Q3, what should we expect?
Sure. So, good morning. Thanks for having me on your show. And yes, one of the critical parameters that we monitor is how earnings are incrementally moving. And one of the reasons behind the consolidation that happened in the market last year was lackluster earnings. We actually cut our earnings by almost about 10 to 12% over the last year or so. And for the first time in September quarter, we saw early signs of an earnings upgrade cycle starting up. And from what I'm hearing as channel checks into the Q3, I think certain sectors more than others are certainly looking better, but net earnings are looking better than what people initially thought about. One is on the consumer discretionary side. Certainly, the checks seem to suggest that whether you look at autos or some of the big ticket consumption, the uptick seems to be sustaining. That's one. Secondly, while overall from a financial standpoint, some of the segments within financials are actually bottoming out. So we're going to see a little bit of a bounce back with regards to growth rates in the sector. These two sectors are, from the channel set so far, seem to suggest that demand is holding good and in fact turning towards the better. IT, the furloughs have not been impacted as much. So broadly in line is what I would say. And that's what the channel check seems to suggest. So, which is good news, given what we have seen in the last few quarters. So far, the earnings season expectations for the immediate quarter seems to suggest that earnings will likely hold up, which is good news heading into New Year.
So for auto in particular, just to go a little deeper, what's the expectation of an earnings improvement? I mean, do you have more granular details? Because the sector has also done very well ever since the announcements of GST cuts. So even if earnings deliver, can there be upside in stocks from here on?
I think overall, the September quarter numbers when they came through, while the numbers are better than expected, I think most of the estimates on the sell side didn't change all that much because everybody wanted to see that follow through onto the December quarter numbers before they change the full year numbers. That I think will finally come through with this quarter numbers, particularly for the consumer discretionary sector overall, and that's what I'm talking about. So I would say that yes, versus the current estimates which are baked in so far, I would say that we could see an earnings upgrade of about 2 to 3% come through with regards to even the expectations that we are on two sectors that I talked about: consumer discretionary and financials.
Okay, all right. Well, Trideep, just wanted to narrow down on maybe a couple of sectors. We were just discussing the entire railway space just some time ago, and it's going to be in focus going into the budget. Is that a sector which would pique your interest at all?
Not as much as in the past, is the right way to put it. I would say that overall, if you look at Modi 2.0, it was all about capital goods and different elements of infrastructure coming into third gear and fourth gear. In Modi 3.0, the party is split between consumption and infrastructure. And hence, because the overall spend is split between these two areas and little more emphasis on consumption, and we have seen plethora of measures like GST reforms, tax cuts and whatnot. And next year, we have 8 pay commission coming through. On the other side, the infrastructure investments would likely be more selective going forwards. So rather than having a broad-based spend in railways, maybe Kavach or certain components of railways will see investments and broadly at flattish level. Within infrastructure, though, the areas that we see continued strength in spend from a government standpoint will be defense. That's an area we clearly see that even Y on Y as we head towards budget, I wouldn't be surprised if the allocation toward this space increases meaningfully versus what we have been used to in the past.
All right. Hi, Trideep. Good morning and good to see you, Ben. What are you making of these newly listed companies? Lenskart, so much of debate. The stock actually has done pretty well post-listing. It could be a limited float factor as well. Grow has done pretty well. While on the flip side, something like an urban company listed, went to 200 rupees and then pulled back big time. Any of these stocks you like, which are worth looking at post the recent correction? Meesho, case in point. Stock went up big time. Yesterday it was at lower circuit with no buyers.
So, of course, we can't talk specifics, but 2 or 3 things that I would like to highlight here. One is, given how this new age IPO companies are popular at the time of the IPO, the anchor allocation and the main book allocation is hardly little, and liquidity in some of these stocks is really challenging. So I think one should evaluate the performance of the stocks, not from the listing price standpoint, but after 1 month and 3 month lock-in opens. That's when one has decent enough liquidity and true price discovery happens over a period of time. So hence, the right price discovery we will figure out over the next 3 to 4 months with regards to these IPOs. So we don't get excited. Bottom line is we don't get excited by the listing day price move. Some of these names are certainly in our portfolios. While I can't tell you the names, what I could say is that stocks which have unique business models, who have a path to profitability and unit economics are kind of in their favor, we certainly kind of look to hold them. Though I have to say that of late some of these IPOs are priced pretty finely. So we would use price declines to build our position rather than be very aggressive on a day-on-day basis is the way I would put it.
Deep, as a house, what is the call on gold and silver? Are we in for a correction after what's been an extraordinary year for precious metals? Or do you think the rally continues? And what could be the extent of any correction? Because correction is natural in the normal course of any asset.
The way I think about equities and gold, these are the 2 ways where over the medium term are good instruments to beat inflation overall. And ultimately, given that broadly, we are entering into a tariff-led world is likely to be more inflationary than what we have been used to before. Now, of the 2 asset classes, when earnings estimates are coming through, equities would tend to do quite better, would turn out to be better inflation hedge. But when earnings estimates are not coming through, precious metals do the hedge component and kind of, do well. Over the last 12 to 15 months, earnings estimates have been lackluster, and that partly explains the strength in precious metals, along with the worries about various global currencies. My sense is if we do get a sustained earnings upgrade cycle come through, equities would do better than precious metals. Of course, for that, the tariff and some of these areas which we have not resolved so far needs to resolve. But if they were to come through, then 2026 equities might do actually well, and gold and precious metals might actually see a bit of a healthy correction in the context of asset allocation.
Okay, Trideep, I don't know how much you've possibly looked at this entire GLP-1 opportunity, but it is expected to probably add 1 to 2% to the pharma growth. And all of this conversation is coming at the back of Novo Nordisk also getting approval from the FDA for a weight loss pill as compared to the injection, which is tougher to take. So just give us a sense, are you looking at pharmaceuticals in India from that lens as an opportunity?
Indeed, and we have positioned our portfolios to benefit from this. And for the benefit of viewers, while GLP-1 turned out to be the primary reason of popularity initially was diabetes and the result for that, it is obviously touched upon a far bigger market, which is the weight loss market or the obesity market, which is one of the issues to deal with. And hence, we do think that it will be globally, not just in India, a fairly popular area with a large TAM, if you may call it that way. The idea is to find those companies which can capture this opportunity profitably in their P&L and balance sheet. Indian companies particularly are looking to launch of the generic version sometime mid of next year. As and when that happens, a few companies will benefit more than others. And I can tell you in the context of pharma, we are certainly already positioned in there and would look to kind of continue in that direction.
Okay. All right, Trideep, we're going to let you go on that note. Thanks very much for joining in and speaking with us and giving us all of your perspective in terms of the markets. Well, for the Nifty, is just about consolidating with a little bit of a negative bias at this point in time. Seems as though people are starting to take those holiday vacations, and you can see the volumes and the texture of the market definitely much quieter at this point. But let's get talking to a couple of companies. Mazagon Dock Shipbuilders is the next management on the show. The stock is up more than 13% in 2025 so far, and the defense major expects its order book in excess of 1 lakh crores by FY27 and margins at 15%. To discuss this, we have with us Ruchir Agrawal, who's the Director of Finance, Mazagon Dock Shipbuilders, and we will be focusing on 3 main points. First is profitability outlook and provisioning overhang. 2, order book targets, update on major tenders and execution concerns. And finally, strategic diversification plan, de-risking revenue concentration. So these are 3 of the points that we will be focusing on in today's conversation. Mr. Agrawal, thank you very much for taking the time out. First, just wanted to start by discussing about this large order award of the P-75 Scorpene submarines. What is the status of that? Because there is concern that it is yet to materialize at this point in time, and it has been delayed versus what the company had guided.
Good morning, viewers. And as far as P-75 Scorpene contract is concerned, it is still live, and Navy is finalizing the deal for that. But we have not been called for any negotiations so far. It is still on. We can only say that the deal is still on, and we expect that by, say, end of the FY26, we should hear some good news for that.
What's the size of this particular order, sir, if it comes through by the end of FY26?
We expect, but the negotiations have still not started, and it will take time. So it may be.
Okay, I think we've lost the audio for Mr. Agrawal.
By 27, yes.
Sorry, go ahead. If you could just repeat what you were saying.
I'm saying that we have still not been called for any negotiation for CNC negotiation for Scorpene class submarine, P-75 additional, which we have to make 3 submarines. And we hope that they will be coming, and it may be by end of FY26 or maybe by early FY27.
Okay, so you're hopeful of possibly hearing about it by the end of FY26, early FY27. What is the quantum of the order, if you could just repeat that?
It will not be right on my part to figure any figure for this. And we will be knowing it closer to the deal when we back.
Okay.
All right. Hi, Mr. Agarwal. Good morning and good to see you. When the street is waiting by actually to hear about some of these large orders. But I want to quiz you on a couple of numbers that you had given us earlier. I want to know how far away from the target you are. Now, you had guided, I think, for an order book to cross 1 lakh crore by FY27. Current order book, if I look at it, it's ballpark 28,000 crores. You could correct me on that number. So which are the large orders you're expecting, say, in the next 18 months? And what will the order book look like by the end of FY26?
Order book was around 27,400 on 30th of September, which is still depleted this quarter because we have executed many of those contracts. How we expect that as the negotiation for 75I is already on, and before close of this financial year, we should sign the deal. And in that case, if everything goes well, our order book should be more than 1 lakh crore.
More than 1 lakh crore by FY27, correct?
No, by 26.
1 lakh. So that's in the next 3 months. You're expecting so much of order inflow.
Yeah.
So from 27,000 crores, you'll end the year at 1 lakh crore of an order book. Correct, Mr. Agarwal?
We are around 25,000 now. 27 was the figure of 30th September. So we will be around, we will be exceeding 1 lakh crore by FY26 end.
Sir, and just to go back to this to understand, other than the Scorpion submarine order, are you expecting any other large order wins which will help you plug the gap from where you are today to get to 1 lakh crore by FY26 end?
I would like to clarify that this Scorpion order we are not expecting so early because that is still not finalized. And I already mentioned this in my today that we expect that the deal is still not closed and it may come up. We have not been called for negotiation. But for 75I, the negotiation is already on. And we expect that before the close of this financial year, we will be signing the contract with Navy.
So the P75I are 6 submarines where you are negotiating for?
Yes.
Okay, and you could hear on that by when, you said?
The negotiation is already on and it may come anytime. But we expect that before the end of this financial year, some good news should come.
And the quantum of the order, again, if you could apprise us of that?
And the price I would not be able to tell because it is under negotiation.
You had given, sir, a guidance of 12,500 crore of a top line in FY26 and about 15% margins. Does that hold?
Yeah, we are holding with that.
You're holding with that.
And we expect that we should meet that, although challenges are there. This year, the monsoon was a little bit extended, but we expect that we will be meeting these targets.
Okay. Other than monsoons, are there any other challenges? Could you elaborate a little bit more? If you miss the target, what could be the reasons for doing that?
Maybe I don't expect as of now what we are reviewing that we will be missing the targets. We expect that we will be achieving the targets. And let's see how these 3 months go ahead.
Correct. Mr. Agarwal, what about exports? It's a smaller proportion, I think, of your business, but you're quite optimistic on larger orders coming in. So you could tell us what's in the funnel with regard to exports, and as a percentage of revenue, what is it? Where is it headed?
As of now, we are only we have only one order in hand, that is around 715 crores. And in my earlier communication, I already mentioned that we are not earning on those contracts. In fact, we are losing on those contracts. And now when India is coming up with the big shipping infrastructure and facilities, we expect that if we are also there, then probably we will be going for more export orders from here from this position.
Okay. Just wanted to ask about the provisioning as well, because that the reversal actually helped your profitability. Is there any kind of provisioning reversal which is expected in Q3, Q4?
I don't expect too much of reversals of provision what we made for our MPV and Coast Guard vessels, and price at which the orders are being made. I don't think a major reversal, and I also don't expect that there could be any increase for, on those products. Almost what we provided in the
Okay, so you're not expecting...
last quarter of this year.
Okay, all right. So we're going to leave it on that note. There's a little bit of a scratchy line there. So that's Mazgon Dock Shipbuilders expecting lesser amount of provisions in the next 2 quarters. They're not too hopeful about certain projects, but they're sticking to their 1 lakh crore order book guidance, possibly by the end of FY26. Nigel, that's what the management said. So maybe there'll be quite a gap to fill in terms of getting there from here to then.
Absolutely. All right. I'll tell you what. Let's slip into a short break. On the other side, we'll get into more festive mode. We have the management of Chalet who will be joining in to tell us how's the festive season panning out and what's the outlook for the second half of the year. Stay with us.
Welcome back. In our corporate conversation now, let's invite the management of Chalet Hotels. It's the perfect time given the winter vacations and the festive season. Shwetang Singh, Executive Director of Chalet Hotels, will now be joining in. He's currently the Executive Director, but Mr. Singh will take on the role of the CEO and MD effective 1st of February 2026 for a 3-year term. We always speak with Mr. Sanjay Sethi, but he will transition as a part of the leadership transition, move on to being a non-independent, non-executive director from 1st of February 2026. And with Chalet, we will discuss 3 main points: holiday season demand trends, the hospitality sector outlook for next year, and financial synergies with Athiva, their wellness plan. Thank you very much, Mr. Singh, for joining in. So before we get to the big picture, what your plans are as a CEO and MD, first just give us a channel check how Q3 has been, because historically, the second half of the year is always stronger for you. You get about 55% of the annual revenues in H2. And this time, Q2 had very few wedding dates, which negatively impacted you all. So many weddings happening, seasonally strong. So Q3 in terms of revenue growth, ARR and occupancy. On these 3 metrics, what is your expectation?
Thank you. Good morning. Thank you for having me on the show. You seem very well informed with respect to how hospitality behaves. So there's not much I can add there, but I can tell you that we have had a historic November. Usually when you look at this festive season, especially Q3, it's best to look at October and November details together, because what happens is that basically the Diwali moves along with the Decemeber season, and that's typically slightly low in terms of business. So when you look at October and November together, October was steady. November was absolutely historic. It's been, from what I hear from my colleagues, it's been the same for the larger industry as well. And December is steady. So we should be coming out smelling like roses from this quarter overall. You're absolutely right. The reasons are clearly seasonality. The fact that the Saya dates, we had a strong quarter of Saya dates. It's also the time when, a lot of corporates set up their MICE, etc. So it's also good from that perspective. So overall, just the weather, the fact that there are Saya dates and there is MICE movement all put together, along with the fact that there is leisure movement at this time, as a lot of people take holidays as well. turns out makes this quarter a very strong quarter. We expect a similar sort of a quarter for quarter 4 as well. Again, February coming out very strong. Unfortunately, January doesn't seem to have SIA dates. It typically opens up around the 14th of January. This time we have one or two, but not the big ones towards the end of January. February then again is very, very strong, and March is steady. So quarter 3 and quarter 4 together should come out very, very strong. In terms of ADR and occupancy, whilst it's we don't give out specific numbers, but I can tell you that it will be comfortably in double digits and probably mid-teens overall.
So ARR mid-teens in Q3 and Q4. What about occupancy? So when you say that November has been historic, what kind of occupancies have you enjoyed?
Again, it's price sensitive data, but I can tell you that both occupancies and ADR went through the roof, and both for our leisure and business locations. So it all happened at the same time. South has been very strong for us, both Hyderabad and Bangalore. And in Bangalore, we had also added some extra number of keys at some 130 keys. And that has been very well received by the market, stabilizing pretty quickly. So actually, overall, we have had, very comfortable double-digit growths, and the overall revenue for the business, etc., and EBITDA growth will also be very comfortable double digits, and higher to senior teens actually.
Okay, Mr. Singh, thanks for joining in. Well, the two of the segments which actually caught my eye is your residential projects, where the revenue was up 94% on a year-on-year basis in Q2. Your commercial real estate segment was up 76% year-on-year. Yes, nascent, but your residential project is already doing around 280 crores in terms of revenue at this point. Just give us an outlook in terms of what the plan is on these two segments. What are the kind of projects that you're currently executing? And what is the run rate that we're expecting on these two segments?
Let me talk about the residential project first, because it's a one-off. It's not our main business. Right? Actually, at the time when we got listed, it was seen as a risk. But thanks to the hard work that the team put in, we have actually managed to make it a big positive for us. What you see in terms of revenue and EBITDA booking for the residential is not a steady income that you can expect going through to the subsequent quarters. It's basically, very at certain points in time, once you have received the OC, once you have completed more than 95% and issued the letter for possession, it's only at that time that you can book revenues. So these revenues and EBITDA tend to be clustered, and therefore please see it as a one-off. There are still 2 residential towers in that project that have still to be booked. The first set of 9 towers are already booked, and therefore there was a spurt in EBITDA and revenue. In terms of residential, again, we will not necessarily go down that business, at least as a major plan or central to what our business is. Moving on to the commercial real estate, right now we have 2.4 million square foot of commercial real estate that is in play. And we have about 900,000 that's under development. Of the 2.4 right now, we have about 76% that is occupied. And our last exit was about 26 crores per month. So if you multiply that by 12, you get basically what is the annual expectation coming from there. But as we speak, we are leasing out more. Particularly in Powai, we have some space to lease out. We are only at 77-78% occupancy in Powai. So that's going out, and that should then bring up the revenues and EBITDA in that segment as we go forward. Again, whilst it's quite central to our business, commercial real estate, but it's always been seen as a sweating the asset strategy. Our central business remains hospitality, with commercial real estate only adding an ancillary revenue, but a very significant one to cover us both from an annuity income and cover us against the cyclicity of hospitality.
All right. Hi, Mr. Singh, and welcome to the show, and looking forward to interacting with you. Nigel on this side. Well, Mr. Singh, I must confess that I had a bit of a busy year personally. Couldn't take my family too far away from Mumbai, but I visited your Powai property a few times during the course of this year, and we felt we were far away from city life. Really, really good property out there. But I want to focus on a couple of other brands that you've launched. The Athiva brand, I think you've launched close to 900 keys. So tell us the positioning of Athiva. And what are the targets you've set out for this brand?
So Athiva, our first Athiva opened in Khandala. I think you were referring to Khandala, not Powai. if you've been out there, and it used to be the earlier Dukes. We have
Mr. Singh, I had visited your Powai property.
what is the FPS today?
Yeah.
Okay. So that's
precisely, but
currently under renovation, and we hope to open that in the first quarter 4 of this year.
Right.
So that's in the works. Coming back to Athiva, we are positioning it in the upper upscale segment, just below leisure. The equivalent would be a Marriott or a Hilton brand from those portfolios. Right now, we have made an announcement of 900 plus rooms, but essentially they are all our hotels. So if you see Navi Mumbai or the Aksa Beach, which belongs to the group, the two Goas or Thiruvananthapuram, they all belong already to us, and this is not a third-party play at this point in time. It's not an asset-light play. It's also I just want to make clear for our investors and for our viewers that the 900 that we talk about is part of our announced pipeline itself, barring the one at the Aksa Beach. So actually, of the 1,200 keys that we've announced in our pipeline, this 900 less 150 of Aksa Beach, less 250 of Aksa Beach is already in the pipeline. So these are not new hotels. These are only going to be branded Athiva going forward.
One number answer, sir. I think 5,000 keys is what you had guided by the end of FY26. So after your first term of 3 years, what would the number stand at? One number.
It should be comfortably more than 5,000, although our announced pipeline is 4,600. But we have enough within the group going on within the group that should take us north of 5,000 is all I can give you at this point in time.
Okay. Well, a pleasure speaking to you, Mr. Singh. Wishing you, the entire team, a very, very good end to the year, and you're sounding very, very optimistic about prospects for the second half of the year. So wish you well. We'll catch up in 2026.
Yes, we must do that. Thank you so much.
All right, let's focus on the next corporate, Belrise Industries. That's the management on the show. The stock is buzzing in trade. There was a very large trade that took place earlier today. They have also signed a strategic agreement with the Israel-based Plasin Sasa for defense opportunities. The stock, in fact, has seen a big gain post its listing. To understand who was party to these morning trades, as well as what's the way ahead, we're joined by Mr. Swasthit as well as Sumit, the promoters of the company. Hi, gentlemen. Good morning, and good to have you all in. Give us a few details, gentlemen. We understand that there was a large trade today, and the promoter entity was the seller. Could you clarify on that? What was the proportion of sale? Who was the buyers, and is there an intent to further reduce stake in the time to come? I think it was 73% is what the promoters held. Post today's trade, it would come down a little bit. At what level are you all comfortable?
So I can answer the question. Firstly, I'd like to talk about why we went ahead and did this trade. So right from our first earnings call, we have guided on merging or acquire two of our related party entities. One is Badwe Autocoms and second is Exumates. So if you were to merge both of these entities in, that would have pushed our promoter shareholding above 75%. And in that case, we would have violated the MPS norms set by SEBI. Hence, we have done this transaction in advance of the merger that we filed. And that is the reason why we have gone ahead and done this transaction as of today.
Okay. Got it. So post this transaction, the promoter holding would have come down to around 66, 67%?
Yeah. Correct. Today, it's around 66 to 67%.
And who was the buyer today? If you could give us some color on that.
We are unable to mention that.
I thought I'll try my luck on that. But anyways, we'll wait by, once the disclosure comes in on the exchanges. Post getting the unlisted entity into the listed entity, as you had promised at the time of the IPO and various other analyst meets as well. What will the promoter holding look like?
So that will, of course, depend on the valuation that we do it on. What we have committed to our shareholders and what we think is extremely critical is that we'll be doing these transactions at or around the book value. So which is why we feel that these transactions will be value accretive to our shareholders right on day one. And in that sense, we'll be able to reward our shareholders for the fact that they've been with us on this journey so far.
Okay. All right. Well, let's move away from that. You've now signed an agreement with an Israeli company for a defense opportunity, which could possibly fructify over the next 2 to 3 years. Just give us more details on this.
Absolutely. So you signed a strategic partnership agreement with a company called Plasin Sasa. They're based out of Israel. They're a very, very innovative company. They're a global leader in armored solutions and anti-ballistic protection mechanisms and the likes of it. And we've signed specifically for this one product called the Atom, which is a UGV, unmanned ground vehicle, which will be focusing on the Indian market in terms of the product, in terms of a strategic intent to work with the MOD, but also working with Plasan to manufacture these items and products in India, as well as manufacture and supply to them for their global supplies.
Okay, but when could we possibly see revenues show up in the P&L from this particular strategic partnership? And is this going to be one of many? Just give us a sense in terms of the longer term plan, as well as when the monies will show for this particular partnership.
So, as you know, the defense space is a space which is like an elephant. So once it takes a little bit of time to move, but once it moves very surely. So in a sense that the intent is to work on this with all hands on deck. Plasan, Sasa team, as well as our team, will be working on building or on fructifying something very soon. However, with working with the MOD, sometimes things can take time, but we're very confident of something fructifying in the near future. At the same time, this partnership allows us to manufacturing supply to our strategic partner. That can happen sooner.
What's the total addressable market opportunity on account of this partnership?
So Plasan itself is a $2 billion company globally. So it's massive and is able to garner share with all of the top suppliers in North America as well as Europe. So in that sense, the market opportunity is quite massive, not only in India, but globally. In fact, we've already started working with Plasan on supplying some components for their global exports. So that's already in progress. And we should see revenues of that in the next fiscal year.
Okay. You said Plasan is a $2 billion company, right? But now with this partnership, what is the total addressable market opportunity that you all are gunning for? Do we have a number for that?
We would not like to. So if you think about it, it really depends on what the quantum that the MOD would like to procure. In a sense, it's a large market, but we would not like to comment on a specific there.
All right.
Will the margins be higher? I mean, are you moving into higher value segment? Can you at least tell us that?
Most certainly.
So higher margins.
Higher margins.
I mean, give us some number, right? I mean, how much higher would it be? A couple of 100 basis points, more than that? Just some color on that front. As a percentage of the mix, how much is defense likely to contribute since you're looking at de-risking the business?
So I can answer that. So defense and aerospace in general as a segment would be a higher margin business than our automotive business.
Okay.
And of course, there can be larger work capital cycles, but in the end, we expect this business to be ROCE accretive for our business. Right now, we don't have a number in mind as to what we want the share of defense and aerospace to be for us in the future. That being said, we're very confident that we want to make this segment a meaningful part of our business going forward. And all the efforts as of now are going towards that.
Got it. Well, we're just going to try and get some more numbers from you. Just wanted a sense, because you've maintained your mid-teen revenue growth guidance for the medium term. So just tell us what the exit rate would be for FY26 and eventually for FY27, when we do see maybe defense coming through in terms of your P&L. What can we expect in terms of your guidance?
So we are maintaining the mid-teens revenue guidance as of now with stable EBITDA margins. What you'll appreciate is just this year, we have announced 4 new manufacturing facilities with discussions ongoing for a few more in the future. So in that sense, every time we launch a new facility, there is a bit of drag on margins because no facility is going to make optimal margins right from day one, which means that the potential gains that we make through higher value segments like aerospace and defense, or maybe working more in the 4-wheeler and commercial vehicle sector, that of course will be offset with all of the new growth that is coming in. So that's why we're maintaining a target of a mid-teens revenue growth in the medium term and stable EBITDA margins.
Okay. No more promoter stake required? Just one final word?
Sorry, can you repeat that?
Will the promoters need to sell further stake for all the integration amalgamation that you've planned, or this is it?
The two entities that we're planning to merge, this should be it.
Okay, and there is nothing else which is on the horizon in terms of further stake sale by the promoter?
Nothing else on the
We'll
horizon.
keep you posted.
Okay, all right, gentlemen. Thanks a lot for joining in. It seems the street was waiting for this block deal to get out of the way. And now you have the stock that's moved to the high point of the day. Wishing you all the best. End of 2025. It's been a good listing for y'all. Your shareholders would be happy as well. And those that got the shares earlier today as well, they're already sitting on some hefty gains. We'll wait by for the names.
And even the discount was not too much. I think the floor price was about 3% lower compared to where the stock closed the prior day. So even the block deal didn't take place. And this is a stock which has done well since the IPO price.
That's right. And if what I hear correct is when they were listing, the bankers had an opinion, and there were various interested investors as well that believe pricing should have been at the lower end. And, they went with that. And the returns are there for the taking. Thanks a lot, gentlemen, for joining in. Stock now at the high point of the day, 11% higher. No, in all probability, no more selling from the promoter entity. And they had to do it because, as promised, that unlisted entity was going to be in there. But Chandan Taparia, Motilal Oswal Financial Services, is joining in to help us out with his take. Chandan, how are you feeling today? Going to be working for Christmas? And what's the view on the market? That initial dip has got bought into. As you were prior on the screen, the Nifty is actually flattish. What's the fresh trade?
Good morning, Nigel. Thanks for having me. So yes, it seems that market is in mood to celebrate Christmas, and best wishes in advance for a fantastic festival. The good part is that we are in a range. Nifty got stuck in a range of 600 points in between 25,700 to 26,325 from last almost 30 trading session. The VIX is below 10, which indicates that the market is not in hurry to see the next leg of momentum. But yes, the trend is intact. Supports are shifting higher. Index gradually shifting its support to higher zone and recently took support near its 50-day exponential moving average. So I believe slow and steady market is gearing up towards the new all-time high territory to welcome the festivity as well as welcome the new year. So I believe till Nifty holds above 25,800, buy on decline could continue to take the indices towards 26,350 to 26,500 marks. When we talk about Bank Nifty, it is also consolidating in a broader range from last almost 7-8 weeks. Supports are intact. Until it holds above 58,800, Bank Nifty has potential to continue the momentum or swing towards 60,000 marks. So slow and steady, the levels are shifting higher. Range is narrow because of the lower wicks, but trend is intact and we will continue to be with buy on decline stance. Now talking about trading ideas, positively on the entire metal basket, metal and mining stocks are likely to do well. In fact, at the beginning of this series, we came out with the report about the seasonality theory that in the month of December, out of 10, 8 times the metal index remained positive. And this really worked well, and we still believe the momentum could continue. So positive view on the entire metal and mining name, whether we talk about Hindustan Zinc, NMDC, National Aluminium, Hindustan Copper and all. But here I'm recommending to buy on NMDC. It has given a consolidation breakout on the daily chart with surge in open interest volume. We have seen put writing activities, put call ratio of the counter is shifting higher. So looking for a fresh leg of rally in the counter, one can buy with support of 77 for an upside target towards 86. Second trading idea, that is buy on Glenmark. We have seen consolidation breakout and selective pharma counters are doing well. Supports are gradually shifting higher. We are expecting better rollover, and roll cost is also turning upwards. So recommending to buy with support of 2020 for an upside target towards 2150. One more trading idea, that is bottom out approach on defense counter. It seems that HL has bottomed out after the lower top, lower bottom of last few weeks. And now one can buy with support of 4320 for an upside target towards 4650 marks.
Okay, all right, Chandan, we'll leave it on that note. Thanks very much for joining in and giving us all of those tech calls. Well, Glenmark, he mentioned, is in focus also because they have launched a particular drug in the US markets. The market size is around $67 million, and the drug is used as an emergency when somebody has an allergy attack. So that stock is in focus on account of that as well. We'll take a short break, but on the other side, Manisha Gupta will join in and she'll be taking us through the commodity space. Stay tuned. Welcome back. Let's shift focus to the commodity space now. Manisha is here with us to tell us what she's tracking this morning. Manisha, over to you.
Well, thank you for that. It's not just the precious metals which have been buzzing in trade. By the way, they have made yet another all-time high. But it also is about the base metal prices, which have been surging as well, and most of them heading on a positive note to end 2025. The best of the gains, of course, clearly coming in for the Dr. Copper. We've seen 39% of gains come in for that. Aluminum is trading at a 16% on the higher side. And we've seen zinc prices gain up by 3.5% as well. The first half for zinc wasn't so great, but it's commendable that we've been able to come into positive for this one. What also has done quite well has been tin prices. That, of course, is an outperformer with 48% of gains. But we haven't seen such a great comeback come in from nickel and lead prices, just about in the positive on your screens. So it really is copper, which is the hero within the metal pack. There's a reason it's called Dr. Copper. If you look at the LME prices, well, we have seen a record highs very close to that $12,000 a ton mark. When you look at the US copper prices, we saw an all-time high in the mid-year. And having said that, it's been a great time for copper this year because almost everything that you're looking at in sense of fundamentals seems to be very, very supportive. It is also headed for the strongest annual gain since 2009 on the back of outages at major mines. There are limited new project developments that we've seen in sense of reports or on-ground break-in that has been supportive. When it comes to mining, well, whether it was about Chile, Peru, Indonesia, you've seen concerns come in from all of those major producing countries there. And there's no major investment seen. Deficit is expected at 19 million tons by 2050 on the back of lack of major investments in any project. So when you look at the demand in the meanwhile, that is expected to be on a stronger side. Long-term infrastructure demand is what the markets are working with. It also has to do with the fact that there are historically low treatment and refining charges. We do understand that when it comes to China and Japan, they've agreed on zero duty, 0% TNC charges. So that tells you that there is a lack of refining metal available in the global markets there. But it also is about on the back of demand growth coming in on EVs, grid upgrades and data centers. But markets do say that it is majorly on paper because when you look at the Chinese market, there is weak demand coming in from there. It also has to do with the fact that not so much demand is coming in from Europe as well. It also is about high premium that is pushing manufacturers to cheaper alternatives. It also is about US, which has been buying a lot of copper because of expectations of a 15% duty coming in. So there is copper, just that it is not getting consumed, but it is getting stockpiled, is what the markets fear could lead to some correction going forward there. The other one really is aluminum. 3.5-year highs onto this one, 29.70. It's not too far away from its all-time highs either. And for aluminum as well, it is the Mozambique smelter, which has gone down in sense of maintenance, which is pushing the prices higher. It is about disruption at Iceland, inventories at Japanese port down by 5.5% on a month-on-month basis. And then it is about China, which also is putting out a cap at around 45 million tons. No more production than that in this year tells you that if China stays on course with this 45 million tons, you are looking at higher highs coming in for aluminum as well in the next year.
Okay, all right, Manisha. Thanks very much for taking us through the entire commodity setup. Well, for the markets, absolutely flat at this point in time. Stocks such as Chola Investment up around 6.5%. Time for a break now. On the other side, former RBI Governor Decemeber speaks to Lata Venkatesh on the current rupee decline, foreign fund selling and the India growth story. Stay tuned.